morning, good afternoon, good evening, depending where you are on this glorious planet. And welcome to the Wednesday, the 4th of January, second of the year, Bull versus Bear webinars for trade day. Steve Miley here on the call. Welcome, everyone. We're going to go through our usual regular run through in here, Canada, what we've got coming up, what we've already had today. We'll take a look at the macro fundamental events that are impacting markets right here, right now, and we'll take a look at the technicals, take a look at the charts, how we're setting up going into today, where those trigger points are. Right, first of all, calendar. So from today through the balance of this week, super busy. We've already had French CPI and PMI and German PMI service data this morning. French CPI below expectations. It's in red in here. This is actually a bullish, okay? It's not red, it's not bearish, it's positive, below expectations. Expected at 0.4 plus, came in at minus 0.1. Expected at 0.3, came in at minus 0.1 as well in here. The PMI data beating expectations. This is the service sector. Remember, this is the S&P Global data, and then we also get the S&P Global data for the Eurozone, French, German, and Eurozone as a whole. All beating expectations for composite and the service sector data in here this morning. So all very positive. This afternoon, we get the ISM data in here for manufacturing. Okay, ISM manufacturing data, 10 o'clock Eastern time. At the same time, we also get the JOLTS job opening data. Market's kind of starting to watch this a lot more recently. Okay, so we are watching that JOLTS data as well. So the ISM data and the JOLTS data in here, job openings data, coming up at 10 a.m. Eastern, and then 2 p.m. Eastern we get the Fed minutes, and also then at 16:30 Eastern we get the API weekly crude oil stocks. Okay, and then overnight we're switching back to the CAIXIN, which is part of the S&P Global data for the service PMI data out of China. So a huge amount to watch, particularly obviously the ISM data, manufacturing PMI at 10 o'clock Eastern, and then those Fed minutes are going to be critical going into today. 5 things you need to know to start your day in your Fed view. The minutes from the Fed, September meeting due later, expect to shed light on White Ray's 2023 inflation forecast. How hawkish are the Fed is going to be critical going into the day. So we're going to certainly be watching that with a lot of interest, and markets obviously you've got to be ready. Keep the powder dry, guys. Get ready to spring on that. Okay. So Kevin McCarthy saw his long-time ambition of becoming US House Speaker slipping away. Showdown with a conservative minority in here. A lot of issues around that. Not really empathy. The more of an impasse we have, remember, markets like indecision. Okay, they like the status quo. They don't like indecision so much. Sorry, they like political indecision, because then that keeps things the same. China's pausing massive investment shipbuilding industry, and S&P futures having had a strong start today. They sold off yesterday. Apple and Tesla dragging the US down yesterday, but have rebounded overnight. Europe doing relatively well with that data. It's been a strong start to the year so far for Europe. So Wall Street started the year with a dip. Apple and Tesla shares pulling the market lower in here. So there's definitely negatives from that. Production levels from Tesla were an issue. And so that put a downside on that. And and Apple also selling off a report from Nikkei Asia pointing to weaker demand. Okay, so as well. So those two things impacting the tech sector in here, but overnight in here, stocks futures are climbing on China and rates optimism. Well, rates optimism really, we don't know really anything in here at the moment. Okay, but Hong Kong shares rallies, China more support for developers. So we did have that as well coming through. And as we said in there, French inflation slowing, plus that positive PMI data out of Europe this morning has helped. European stock averages higher this morning. Oil saw a big sell-off. It's kind of, we're getting, this is typical. Journalists writing articles to fit, right? So they're on one hand saying China doing well, okay, helping stocks higher, but on the other hand, oil slumping because of US recession and China's battle with COVID. All right, so you can't have it both ways. Oil can't be going down because of China and stocks going up because of China. For a different piece of news. So, but nevertheless, that's what we're seeing in here. Futures edge higher ahead of Fed meeting minutes. We know that. Fed meeting minutes may point to rate hike endgame. That's going to be really important today. Is there an endgame to the rate hikes? Are we going to see any kind of hint of when cuts might even be coming? Oil falls again as concerns grow over global economy. China COVID cases again in here. But again, you can't have it both ways. Again, Eurozone recession may not be as deep as expected. PMI data. So that's what we've already covered in here. And then again, if we look at Europe this morning, we're up even higher. DAX and CAC up 1.6, 1.8%. We've had a really strong start to the year. If I come and look at the DAX in here, so they didn't get beat up yesterday. Let me see if I can actually, this is not the best chart in the world. Doing it off of Reuters, no, it's just going to give me no. But we've had, you can see in here, it's not going to let me zoom in or anything. But we've had a really strong start. So basically, I think pretty much 3 up days. We didn't get hit on the downside as much yesterday from the European stocks. They started off on Monday. They were open on Monday. Remember, European stocks did pretty well. And then let me see if they'll show in here. No, they're not going to give us anything in here. But looking at a really, really healthy start to the year for European stocks. You look at the US, obviously yesterday we dipped back lower and ended up actually down on the day yesterday, having had a strong start, but we're rebounding back higher between 0.25% and 0.5% up across the Dow, S&P and NASDAQ going into this morning. A quick nod to the Fed tool as we had the Fed minutes tonight. So they're pretty much pricing in. So this is the February meeting, beginning of February. So about a 4 weeks time, we are pricing in here a 25 basis rate hike. So currently we're at 425, 450, pricing in 450 to 475. So 25 priced in, and then pricing in then another 25, so 475 to 500. So 225s for February through March. And then when we get to May, it's kind of, although it's still then staying at a total of 50 up from here, okay, there is, it's pretty close between 50 up and another 50 up, okay? So it's fairly close to whether we're going up 75 by May or whether we're going up 50 by May. And it stays that way, look, through the summer. So there's 50 up, there's 75 up, okay? And so then rates looking to be on hold really from May onwards is what the market is telling us, okay? What this futures curve is telling us. And then more of a chance is then you get towards the back end of the year through September, then it is only going to be at 475, 500. So whether that's a cut down from 500 or whether it stays at the 475, 500 level. And then by November, look, we've got even between 450, 475. And then by year end, it's 450, 475, maybe 425, 450. That's back where we are now, okay? So the market is pricing in basically up by May by either 50 to 75, but by year end, we're looking at back to either only 25 up from here or maybe unchanged from here, okay? So that's what the market is pricing in, with really a gap, a pause between May and really September, May, maybe out to November. Okay, so that's what the market is pricing in. It'd be really interesting to see how that starts to change after the Fed minutes, or if it changes after the Fed minutes tonight. Right, let's get to the charts. We'll start off with the S&P on the daily. So we started off on a really positive day, ended up on a fairly negative at one point, and then rebounded to kind of neutral again. We've been in this chop fest. We said before, look, we're still inside. We are S&P activities inside the range from the 22nd of last month. Okay, we're inside that range, and then some of that was obviously over the holiday season. But usually we get decent moves. I said this yesterday, through the holidays in between Christmas and New Year. We didn't get that this year, just chopping sideways. And then yesterday, another chop day. I said yesterday, it could just be a mean reversion day. It could be we've got a lot of data coming through, right? We've got, as I said, ISM today and Friday. We get the service and composite on Friday. We've got today we get the Fed as well. Friday we've obviously got the employment report, and the precursor to that, the ADP report, tomorrow. So we've got a lot coming through in here that we need to focus on. So there we have the market chopping up in between in here. And then down yesterday, did rebound off the lows, coming up ahead of last week's lows, rebounding from ahead of those, and then up slightly today. Again, if I go into the 15-minute chart, no view, right? This is look, you can't trade that, guys, right? There's not any obvious, we are back up again. Hold a gun to my head. I'm very, very slightly positive. We did have a big sell-off yesterday on the open. Okay, sold off in the open, but then we did recover into the close, and we've recovered overnight. And we're pretty much back almost to where we were this time yesterday, just a slightly lower from where we were this time yesterday. Where were we this time yesterday? Look, we were here. So we're only just below where we were this time yesterday, right? We were at 3875. We're at 3855. Yeah, 20 index points down from where we were yesterday. So yeah, no real strong view. Hold a gun to my head. I'm slightly bullish in here, but it's all going to be on that on the data, the ISM data, and then on the Fed, right? So keep your powders dry, guys, in here. And you're just trading the breakouts. I mean, I've got no strong view. I wouldn't be doing anything right now. I'd be waiting to trade through the events. Yeah, wait for the date. Don't put something on. Don't gamble. Don't put it on beforehand. React to the events, right? And just go with breakouts from support and resistance levels that you can identify. And then similar in here from the Nasdaq. Big rally up. Went right up to the resistance point here from the high from the 27th of December. Fouled down from there, just dipped below the previous day's low, but held it above the lows, rebounded intraday, and then back high this morning. And where are we compared to yesterday? Yesterday at 12, this sort of time, was 12:30 my time, we were here. We're just below where we were, right? Just below where we were. So no strong view in it. I really don't have a strong view, and I don't want to lead you to think that, I think here you wait. Okay, wait for the data, the ISM data. Wait for the Fed. Okay, a little bit clear here on the bond market. This is the 10-year. We were positive yesterday. That did go higher and grinding higher yesterday. Continued higher, continuing higher this morning. Can only be bullish on bonds and remain bullish on bonds. Looking for further upside up through this little swing peak here on the 10-year. We've got 13 and a half. Up through 13 and a half. It looks more. No, that's not right. Is that right? Higher here, 15 and a half. Current higher here is 13.14. Yeah, up through 13.15 and a half looks more bullish for bonds for 10 years. Let's take a look at oil and gold. Oil in here, as we said, like big sell-off yesterday, continued lower in here today. We've taken out some supports. Next support here on oil. Can this go further? Yes, it can. It went further yesterday. Low in here on oil, 74.03 to be watching, and then downside below there, 73.40. Downside trigger points on oil. And you look on the 15-minute chart, it does look a little overstretched. But, I'm not going to fight this, right? If you can get a swing back in towards the 75.15, 75.30 area, probably want to short it in there. Let's take a look at gold. And any question, guys, please do throw them into chat. We were bullish gold yesterday. Gold went higher yesterday and higher again this morning. Can only stay bullish in here. We were hesitant. Remember, at this previous peak, we got through there, hesitantly got through there above this peak in here. We're now, I can only be bullish on this. Nothing really more to stay on that. And again, it's similar to oil. You want to wait for the retrace. We're getting the retrace now. You can get anywhere near the breakout from these previous peaks back down to like the 1856-55 area. That would be my goal. Looking at the trend line as well that comes across here. This overnight trend line from this, anywhere down 1858, 1857, 58, 56. Anywhere in there is my buy zone in here for gold, or a little break if you can get above this little counter trend line we got on the top. So back up through, really 1867 on gold looks more bullish. Okay, guys. So yeah, my view here is the way I would approach this. I will approach this is keep my powder dry. I've got the market is so choppy at the moment, and a lot of these markets, gold still looks bullish, oil looks bearish, and bonds look bullish. I think they're quite clear. Equities are very, 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 very indecisive, very neutral. Wait for direction. Into the ISM data, go with the breaks, and then square off before Fed, and then do the same and go with the breakthrough Fed. Yeah, because there's going to be opportunities there to trade once we get a directional feed from the two releases that we have to focus on today. And if you're trading oil, obviously you've got the inventories data later today, and then we've got plenty of other events, as I said, coming up this week with opportunities there as well. So keep the powder dry, guys, okay? And live to fight when you've got the opportunities, rather than just getting chopped up in what is a very choppy market right now, or on the equity side anyway. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Please do stay safe, and I'll be back with you in our bull versus bear webinar on Thursday. Bye.